Last trading day was one of the worst days of December that we've ever seen in the market. I don't see that same negativity out there right now, but look, the markets are at basically all-time highs, up 26% year to date. If you look at the underlying earnings growth this year in the S&P 500, it's flat. And so there has been multiple expansion. There has been positive expectations built into the market. So any incremental negative news is not going to go over very well right now. If you look at a company like Donaldson, DCI is an industrial filtration manufacturer. They reported today. That's why I'm talking about it. This last quarter, they saw minus 4% organic growth, and they're guiding for the next 12 months at about flat organic growth. So there's not a lot out there right now as far as real examples of optimism, but the market is pricing in it. So right now we're at an interesting scenario. So, Bill, I made the point in the last hour that on any given day, the market seems very much prone to wild swings depending on what the latest word is on a China trade deal. It's likely, it's not likely, it's an inch away, no, it's a year away. But over the longer haul and throughout 2019 and really into 2018 when this all started, the markets have done nothing but move up, really, with the exception of last fall between October and the 1st of January.
Yeah, and I think you can draw a real difference between now and last year. So last year, remember, it was really the U.S. and the global economy were both slowing into the end of the year, and the Fed was determined to raise rates, and it did, in fact, do so. The market was clearly sending a signal that was a mistake and worried that the Fed was going to really have an unforced error and drive us into a recession. I think that's where you can be a little more optimistic about this year, maybe a lot more optimistic in the sense that the Fed is off the table. They are not going to do anything for the rest of the year. They said they're going to be off the table for quite some time, at least in terms of any sort of hikes. So I think in that sense, you're not likely to get a signal from the market. I agree on the other side that, yes, I mean, markets have run quite a bit, so there is some optimism built into it. I think, and that's why I think you're seeing these sell-offs on some of the headlines. But I think there's less worry about, say, a very large downturn at the moment.
You guys agree on one thing for sure, and that is you both like small caps in this sort of environment. Stephen, I'm going to ask you as a small cap guy, why would that be? Because the argument in an environment where there are tariffs is that smaller businesses may not have the wherewithal or the scale to force their suppliers, for instance, to pick up that increase in the tariffs. So they may have less leverage, just as Walmart has leverage over its suppliers. Smaller companies may not have that same leverage and may have to pass those costs on to their consumer or eat them. So explain to me why small caps, which have underperformed this year, the S&P 500, why it's time for them.
Look, Melissa, you're right. If you have a commodity product and you're having inflation and tariff headwinds, you're not going to be able to pass those costs along. But if you have an idiosyncratic growth story, which at the Federated Kaufmann Funds we've been looking at for over 30 years, you can grow regardless of the environment. We have a portfolio holding New Fortress Energy. The ticker is NFE. It is an ideal way to leverage low-cost natural gas that we have abundance of in the U.S. and we're actually flaring. They take that natural gas, they bring it down to countries that are using energy, using diesel and heavy oil, and there's a huge arbitrage. New Fortress makes money. The countries save money, and it's the equivalent of planting millions of trees switching from heavy oil to natural gas. This company is going to go from essentially making no money this year to almost $400 million in operating profits over the next 4 quarters for signed, sealed, and delivered projects. I don't care what Trump says about a trade deal or what, but this is going to be a fantastic growth story over the next 4 quarters. The stock is where it was a year ago when it came public, and there's just a lot of opportunities like that we're seeing at the Federated Kaufmann Funds.
Final question for you, Bill Stone. Does it trouble you at all that the market's up 25% when earnings are up about 0%?
It does, but I think you do have to keep in mind that they don't always go in sync. So I think clearly the market was moving ahead with the view that the economy was, in fact, bottoming. And I think that is what you're seeing in, I'll say, the global economy and the U.S. in terms of growth rates. So I do expect earnings to pick up next year because I think you're going to see the global economy really probably has already hit trough, and you're going to see that moving up. Again, it's never a straight line. We've seen some other data, but I think in the end, when you really look at it from, the actual data, you've probably seen the bottom here.
All right, Bill.